Bismillahirrahmanirrahim. Assalamu alaikum, everyone. I welcome you all to another past paper session in the SBR past paper series. Today, we are going to look at another extract of a past paper. We are not looking at a full past paper question. We are only going to stick ourselves towards the relevant areas of the past paper. So that we, solve our past papers. We practice a lot in an optimized manner. Now, the past paper that we are looking towards today is basically crypto question on March, June 2019. Yeah, so this is a relevant past paper for you guys. Overall, this is a 11-mark paper that we are going to address, 6 marks and 5 marks. One thing that you need to make sure that you look towards, you should always look towards an examination question is the requirement. Now, the requirement is advice. It is not a discuss requirement. It is not a how requirement. It is an advice requirement. So by the end, you need to provide specific comments on the conclusion. Specific comments on the conclusion. Remember, whenever there is an advice requirement, you need to make sure that you conclude your overall aspect, your overall findings, and right away give the advice that whether this accounting standard should be followed or that accounting standard should be followed or what should be done. A specific advice needs to be given. Regardless of the fact that that advice is 100% accurate, yes or no, you will get marks for at least putting up an advice. If you don't put up an advice, you will lose marks for that portion. Yeah. So overall, this question is bifurcated within two requirements of part A. So there is one part A that we are addressing, and part 1 and part 2 respectively. The first part is going to be for 6 marks, so you need to plan your answer accordingly. And the second part is going to be for 5 marks. Again, you plan your answers and the write-up accordingly. Okay. So without any further ado, let's begin. We are going to draft an answer. We are going to jot up some points on the question crypto, which is for March, June 2019. Okay. All right, my friends. So let us just start with the first requirement, my friends. So before even working on the content, let us just see the requirement. The directors of crypto would like advice as to whether or not they should account for Current under IFRS 11 joint arrangements. Now, if you remember correctly, we studied IFRS 11 with consolidation. IFRS 11 is joint arrangements. A joint arrangement scenario exists when the entities have joint control of an entity and not even one single person can authorize their control over that entity. That means that there is a contractual agreement between the parties that the major economic decisions will require unanimous consent. I always used to tell you when I used to teach you IFRS 11 that in order to identify if there is a joint arrangement scenario, you look for two things always. There must be a contractual agreement between the parties. And according to that agreement, unanimous consent of the parties must be required to direct the relevant decisions of the entity. These are the two specific requirements that always needs to be present in order to apply IFRS 11. Now, your examiner is asking whether the entity should account for a particular scenario under IFRS 11, yes or no. So you need to look for these two things at least. Okay. So now let us just focus on the question for a while. Part number 1. It says that crypto operates in the power industry and owns 45% of the voting shares in Current. So our company is basically crypto and it has invested 45%, it has invested in 45% voting shares of Current. Now remember, my friends, that if you have 45% shareholding in an entity, so the normals or the general presumption of having control is not met. Generally, according to IFRS 10, there is a general presumption that if an entity has a majority share capital, majority voting rights in a particular entity, then generally you have control. Obviously, there is a specific requirement under IFRS 10 to determine control. But yes, generally, majority shares give you control. Here, the entity has 45% of the voting shares. Now, 45% of the voting shares generally, I'm just saying generally, do not provide you control. Rather, if you think carefully, whenever you have 20 to 50% voting rights in any particular entity, it is deemed to be your associate. You are to have significant influence over the entity rather than control. So definitely the whatever we have studied till now, there is no control. We can conclude that. Yeah. Curren, the entity we have invested in, Curren has 4 other investors which owns the remaining 55% of the voting shares, and all are technology companies. Okay. You are in the power industry and the other investors are in the technology industry. The largest of these holdings is 18%. Curren is a property developer and purchases property for its renovation, potential, and subsequent disposal. So one thing that you have, you understood is that crypto in itself is in the power industry. The other investors belong to the technology industry. And the company Curren, which you have invested 45% in it, it is in the property business. It buys a property, renovates it, and sells it at a profit. So that is their business. Crypto has no expertise in this area. So you cannot actually exercise your control the way you like. You cannot make relevant decisions by yourself because you have no expertise in this area, and is not involved in the renovation or disposal of the property. You are not directly involved within any of the operational facts of the business. Yeah. The board of directors of Curren makes all the major decisions. So the board of directors make all the major decisions. You don't have the expertise. The other investors are from the technology industry. They don't know anything about properties. So you have appointed board of directors who are responsible for running the business. But crypto can nominate up to 4 of the 8 board members. Each of the remaining 4 board members are nominated by each of the other investors. So basically, this is how the board structure works. Yeah. So here is the board. You can nominate half of the board, 4 out of 8. And rest of the investors can also nominate 4 out of 8. So although you have 45% of the voting rights, which generally does not give you control, it gives the other party the control. Still, the other party does not have absolute control as well, because they also have 4 out of 8 board directors nominations. So although the shareholding pattern is 45% and 55%, but neither of the parties can actually make decisions unanimously or unilaterally. Rather, neither of the party can make their decisions unilaterally, because you have 4 board of directors represented in the board, and the other parties also have 4 directors represented in the board. So there may be a joint control scenario coming in. Yeah. It says that any major decisions require all board members to vote, and for there to be a clear majority. Any decision needs a simple clear majority to be implemented. Yeah. So neither you have control because you don't have clear majority, neither they have control because they don't have clear majority. That means, that hints that both type of investors, us and them, both need to unanimously consent on certain decisions. Yeah. Thus, crypto has effectively the power of veto on any major decisions, because you can block. Even if they try to bring up a decision and you don't like it, you have 4 out of 8 board directors and you can veto that decision. Okay. Then there is no shareholder agreement. Period. There is no shareholder agreement. And most of the students should have understood by then that if there is no shareholder agreement, there is no IFRS 11. You apply whatever standard you like. You see, you cannot apply IFRS 10 You cannot apply control scenario because there is no absolute control. You don't have the majority board of directors, you don't have the majority shareholding, so definitely control is not there. You cannot control, you cannot exercise control over the entity. Okay. Plus, this is not also under IFRS 11. Why this is not also under IFRS 11? Because there is no shareholder agreement. I don't even need to read any further. There is no shareholder agreement. You cannot identify IFRS 11. So what should be done? We'll discuss that later. So there is no shareholder agreement as to how Current should be operated or who will make the operating decisions for Current. The directors of crypto believe that crypto has joint control over Current. You don't have joint control over Current because it is not identifiable. There is no shareholder agreement because it is the major shareholder and holds the power of veto over major decisions. You hold the power of veto on major decisions, but you need to recognize this fact that other parties also have the power of veto to your decisions. You cannot unilaterally make your decisions. You cannot, although you will obviously require a unanimous decision now, but still you don't have a unilateral control over the entity, and therefore definitely consolidation cannot be applied, joint control cannot be applied because there is no contractual agreement. Yeah. And technically speaking, even if you take one of the investors out of the other pool and include that investor in your party, you can direct the relevant decisions of the entity. Yeah. So technically, this is not a joint control scenario. No unanimous consent is required. Unanimous consent exists when all of the parties have to make joint decisions. When all of the parties have to make joint decisions. Here, you can always bring about at least one investor from the other group, and you can make sure that your relevant decisions are passed. So it is not a unanimous decision requirement. There is no shareholder agreement and there is no unanimous decision requirement. Your examiner wanted advice on how to account for this transaction, and I would like to conclude this as follows. So I'm just going to write bullet points here. These will help you while drafting your answer. You can draft a possible answer and get it reviewed from me, and that will help you a lot. First, you need to provide intro of IFRS 11. Yeah. So IFRS 11 exists when there are at least two conditions present. A contractual agreement. There is a contractual agreement between the parties. And also that agreement requires a unanimous consent of the parties involved, to make major decisions, right? So this is what IFRS 11 actually says. Yeah. Then you need to link it with the scenario. You see, when you link it with the scenario, you have good data to prove your point. First, there is no control. Since what? No majority shareholding. And also the other fact is that no majority in BUD. So you don't have the majority in board of directors. You are not representing in the majority. So therefore, you cannot claim your control. There is no control. So IFRS 10's requirement is not met. Furthermore, since there is no contractual agreement between the parties that require unanimous consent, therefore, my friends, joint arrangement is also not applicable. Yeah. So you need to properly structure this answer. Okay. Do not miss these points. I'm just writing bullet points for you so that you make sure that you include these points while drafting up your answer. You need to make sure that you draft up a proper answer. Okay. Now, remember in the last part, you need to make sure, my friends, you need to make sure that you advise as well. You don't need to put up any headings, but you need to make sure that you conclude this scenario. You can say, to conclude, investment in Curran should be accounted for under IS 28, right? You need to write the full form of IS 28, which is investment, accounting for investment in associates and joint ventures. Yeah. As there will be significant influence and no control. Yeah. So this is how you are going to basically develop your answer for part number 1 of part number A, and this should do the job. All right. So now let us move on to the second part of the question. All right. So now let us just continue towards the second part of this question. So here examiner says that on 1st April 20x7, Crypto entered into a contract to purchase a fixed quantity of electricity at 31st December 20x8. So on 1st October x7, you made a contract that you will purchase after 21 months approximately. After 21 months, you will purchase electricity for fixed quantity of electricity for 20 million euros. So you have made a contract to buy fixed quantity of electricity for 20 million euros. Now, technically, if you see, you have hedged the pricing of the electricity. You have already contracted with another party that you will be buying electricity, which may be a raw material for you and overhead for you for the purpose of manufacturing. You are going to buy electricity at a fixed price. Now, even if the price goes up or it goes down, if the price of electricity goes up or down, you are hedged from the changes of price. Yeah. It says that both crypto and the supplier have a functional currency of dollars. So neither of the parties have functional currency of euros. So this means that both people are exposed to exchange rate risk. Yeah. So exchange rate may go up or may go down, and you are exposed to that risk. Even us crypto are exposed to that risk. The electricity will be used in crypto's production process. Yeah. So if you technically see, so there is a contract. I'll just talk about it here. There is a contract to buy electricity, and this contract has been made in foreign currency. So none of the parties have euro as their functional currency. So this contract has been made in foreign currency. Don't you think that this type of a contract has an embedded derivative in it? This type of a contract has an embedded derivative in it. You remember we studied in IFRS 9 that almost every foreign currency contract has an embedded derivative in it. There are some exceptions, but yes, almost all foreign currency contracts are embedded derivative contracts. And under embedded derivative accounting, you need to split the host contract, which is to purchase the electricity, and you need to split the derivative element in it and account for the derivative element according to the fair value through P&L approach. Remember that? Yeah. So you had to do accounting like that if you follow the embedded derivative accounting approach. Okay. So if we read the question further, it says that crypto has separated out the foreign currency embedded derivative from the electricity contract and measured it at fair value through other comprehensive income. Now, this is a major flaw. Yeah. So if I were to write an answer, I would say, I can write a particular draft for you guys as well, that according to IFRS 9, almost every foreign currency contract has an embedded derivative. The host contract, again, you can extend the answer further as in based on what you remember at that time. I'm just jotting down the points. The host and derivative element of the contract shall be split with the derivative element being accounted for under the fair value through P&L approach. Thus, the policy adopted by crypto of FVOCI is incorrect. Now, I know for sure that this is an advice requirement. Therefore, I'm rightfully saying what is right and what is wrong. I need to make sure that the exact correct advice is communicated to my client. All right. So I need to make sure of that. It goes on to further say that, however, on 31st of December X7, there was a contractual modification such that contract is now an executory contract denominated in dollars. So the contract has been modified to turn into an executory contract, simple executory contract, and has been converted into dollars. Now, since the contract has been converted into dollars, which is also the functional currency of both entities, therefore, embedded derivative accounting is no more applicable. Yeah. So, would like to just continue that since on 31st December X7, a major modification has taken place due to which there is no foreign currency element in the contract. Hence, this is a simple executory contract which is outside the scope of IFRS 9. This is outside the scope of IFRS 9. It should be treated in accordance with the relevant accounting standard, whatever deals with the purchase of electricity. Okay. I would say that any fair value impact to date shall therefore be derecognized. So, all right. So you need to give proper conclusions to the question. You need to say that what is right and what is wrong and what needs to be done from now. This is an advice requirement. Okay. So let us just complete the question. At this date, crypto calculated the embedded derivative had a negative fair value of 2 million euros. So technically 2 million euro equivalent fair value impact should be reversed. Okay. The equivalent 2 million euro equivalent impact should be reversed. Moreover, the directors of crypto would like advice as to whether they should have separated the foreign currency derivative. They should have separated the foreign currency derivative and accounted it under fair value through P&L, not fair value through OCI. So that is a correction. And measure it at FVOCI. No, that is not correct. And how to treat the modification of the contract. The treatment of the modification of the contract is as such that this is an executory contract. This is not a derivative contract anymore. So any impact recognized to date needs to be reversed, and that is it. Just for 5 marks, you need to make sure that you talk about the intro. You talk about how embedded derivatives are accounted for, Yeah. The third part should be that it should be accounted for under fair value through P&L, not FVOCI. Modification has turned this contract into an executory contract, right? And any fair value impact to date should be reversed. And for these 5 points, you will, inshallah, get those 5 marks which are due to you. All right. So I hope this was very quick and helpful for you guys as a past paper. You need to practice more and more. And I would certainly suggest that you practice on the CB practice platform so that you are very much tuned to the writing speed as well. And this will help you in answering the questions. All right. In case of any query, you know where to reach me. You can always ask me questions which are relevant to this paper or any other paper. I would be happy to advise you. Take care. Allah Hafiz.